All right, thanks for joining me today on my channel. This is Discovering My Dividends. I'm the 1% investor, and well, today we're looking at the stock of the day, and it is just one right now. And yesterday I was talking about how I usually don't want to be, doing this kind of riskier stocks, but I took a chance on one that had a big drop, and another one took a big drop today. So yeah, before we get started, I'm not an advisor. None of this is advice. Just doing a investment challenge to try and make $1 million off of a small account from $50 a month to $1 million in as little time as possible. Right now I'm on track for about 4.5 years. And let's get started. So the stock of the day is Canadian stock SPB.TO, Superior Plus Corp. It had a huge drop. Right now it's sitting at 22% down today. Let's just see. Yeah, that's a bigger drop than even when I first bought in. I've bought and sold. I bought 4 times and sold 3 times. It was a good jumping around, but now it's down a little bit further. I don't know if I'm going to make my my last one back right away. But here's the thing: if we look at the week, I was cruising along at about $8. This morning hit and it dropped down. Now the research I did, this is a risky stock and blah blah blah. You know the drill. I don't really want to be in on stocks like this, but when you get a big drop like that, I always feel like there's an overcorrection, and it seemed like it was worth the risk. Well, for me anyway. So with my portfolio, it was time to jump in, see where that went. Pardon me. Okay, so then what it dropped down to I think it was 619 when I bought the first time. Went a little bit up and down. It's good. The yield was 226 before today, so 2.26% yield, which means actually probably do okay if I'm holding it for a little bit. I wouldn't put in. Normally I'm trying to put in around 5% of the cash that I'm holding right now into a stock. I shouldn't say cash because of my overall value. So my overall value is about 840-ish, 830-ish. And so about $160 is kind of where I want to put into individual buys right now. So about 20%. But in this case of a stock like this, I didn't have the 160. I didn't have the cash turnover today, but I still want to trade. I still want to do something, and this seemed like a good opportunity to do some quick trades. So I was doing roughly around $40 if I remember correctly. So that's quite a bit less. Obviously, it's a quarter of the 20%. So it's only 5% of my overall, which I think is good. But because I didn't have anything to trade, I'm trading. Now you're probably like, oh, you're not getting very much out of it. I'm getting such a small percentage. Yes, that's true. But if you're a new investor, you're new at trading, or if you're starting with a small account, every time you can add to your overall account, the more you're going to have, right? So it's compounding, it's turning it over. And for someone new, it's learning kind of what the markets do. It's learning how to get your trades done efficiently. You're watching a lot of different things, and then you can also look up different stocks and see what the value is. So this stock, based on what I researched, is just below what its value is. Now that it dropped, it was sitting kind of above. So based on my numbers anyway. So when I did my research, it had dropped below. Such a huge drop. I usually expect some kind of a bounce at some point because it's kind of an overcorrection in my mind, but it's not so low that it couldn't stay there too. So it's kind of a chancy one, so you don't want to really throw everything you have into it. That's kind of my thoughts on it. But SPB turned out to be good. The earnings per share is 0.29, so it's very low, but it wasn't negative. So that is a thing for me. Usually I don't like to do any kind of trades with a stock that has a negative earnings per share, because that's just kind of a red flag for me, an easy one to look at. So I usually stay away from those, but this again seemed like a good opportunity. Okay, so if we get out of that for a second, I'm just going to go into my account because I just wanted to talk about a few things. So like I said, my overall balance is around 840. Not balance. My overall value of my account is 840 right now. So I have quite a few stocks that I'm kind of sitting on. But here's the thing. Out of the stocks that I'm holding, only about just over half are stocks that I feel like could turn over in like a day. But I have quite a few that I can't. Now, the biggest thing about today's stock being risky compared to, I made a trade a little while back. NWX was a stock I used to trade all the time, had a really good dividend, so I didn't mind holding it. I wasn't really watching, I wasn't really keeping an eye on it. They'd canceled their dividend. And this kind of happens when you're in this situation where you're not, it's not what you do 100% of the time, right? I have a full-time job, I'm trading, and so sometimes you do things in a hurry to get a trade, and then blah, blah, blah. Long story short. So I'm holding this stock, and it is down 32% right now. Now, it does pop up every now and then, so I'm just kind of holding on, hoping that I will get at least close to what I bought it for. But it's only $20, right? So that's another stock that, well, I shouldn't have done that one at all. Let's not even get into that, but you take those chances. And then I bought a pizza, and it's down 8%. I did not foresee this happening because I felt like it was good. But then I went back and looked at its 5-year history, and this one here has, like, it's got a 6% yield right now, which is pretty good for the price. Where I bought it, it probably wouldn't be quite, it would have been about 5% when I bought it. Anyways, if I look at the 5-year history of it, it was quite high. So I should have actually waited on this one till it dropped probably closer to 15% before I bought into it, because it just wasn't there. So that was far more risky, because the stock had risen and hadn't really come down that much. I should have waited till it got down much lower. So that's where I'm kind of sometimes I get in a rush and I forget to do my checks and balances for my strategy. And this one's a little bit outside my strategy, but when I took a look at this stock, I feel like it was going to go. So when I'm talking about SPB again, so if I look at that one, I feel like this one has dropped way past all its gains, almost back to where it was prior. Like the more recent low is $6, and it's $6.14 right now. It's $6.19 when I bought it, and it's almost given up all of its gains. So I feel like this one had that potential to bounce. Although, like I said, there is a lot of other questionable things to do with this stock, and it's definitely not a long-term hold. So I had to kind of take that into account. I may be holding this longer than I want to, because it may not rise in price. But on the other hand, because of how much it dropped, I think there's that potential to bounce. So risk reward, that was played out here, and I went for it. A couple of my other risk rewards didn't work out, and I didn't maybe do my due diligence on my strategy. So if you're new, maybe solidify your strategy so that you're not making mistakes like that, or making fewer mistakes like that than you want. So that's why my strategy is definitely set up the way it is. If you want to know more about it, check out my videos on the weekend. I talk a little bit more about my strategy. I talk about my investment challenge. And I do trade with WealthSimple. So if you're looking for a new broker, if you're brand new to trading, check out my link to WealthSimple. I don't pay any fees for any Canadian stocks or ETFs that I trade. Check out their fee structure. I think you'll like it if you are going to be looking for a new broker. All right. Thanks for joining me on my video. We'll see you next time.